we were talking about all this purchasing hardware and stuff, right? And those were really costly in the past. And right now it's charging you by utilization.
Yeah.
Right. It's about how many minutes or hours of computing resources you have used. Right. And of course there are surprises. And now back to Amazon, right? Your real painful bills in Amazon comes from when you start to transfer data out. And that's creates a mode, by the way. That's the really perfect mode they have, right? So Amazon, most of the Amazon margin. So you can read this hit piece. You can read this hit piece a month ago written by the Cloudflare CEO. Yeah. He was criticizing how Amazon charges on a network when things transferred out. And because they have this thing called a Bandwidth Alliance. Microsoft, Google, Alibaba, they're all in the same alliance. So they do have like friendly charging when you're transferring between some of these networks. But Amazon is not part of it. Yeah, it's actually a moat. Yeah, and then that makes investors to be like, oh shit, I gotta stick with this. But who knows, right? If Amazon decides to join, then they will have a reduction in the revenue.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free.
Welcome back, everybody, to the FIRL Podcast, best place for long-term stock investors. Now, we're going to have a slightly different kind of podcast today, John. It's not that much different, but there's going to be a little bit more focus, right?
Yep.
And that is, we are going to deep dive into the cloud industry. And it's actually a prototype of something that we want to start soon, right? Which is a more industry primer focused kind of podcast.
Correct.
So, our guest today is the very, very first of its kind. And, he doesn't, before the podcast, he insisted that we not call him a cloud expert, which only means that he is a cloud expert, right? Welcome, YC.
Hey there. Hey guys, I'm YC. Some people call me Yuen Chi.
Okay. Some people, but most people?
Most people call me YC.
Okay, most people.
Yeah. I work in tech, both an software engineering person at the same time in an IT role as well.
Right. Okay, great. So, sometimes I like to introduce the guest. But this round I want you to introduce yourself, right? But not, what's on your LinkedIn or anything, but more, how this is an investing channel. So I want to find out more about what you were like when you were young, right? How do you see money when you were a lot younger? And then how do you end up doing what you do now and also investing?
That's a good one. Surprisingly, right? I actually started stock investing when I was 17 years old.
Okay.
And that came from my ang pao money. I think it was like $900 or something. And then I asked my mother to put it into, I can't remember the name of the company, but it sounds something like Intan or whatever. But eventually I make double.
Nice.
Why did I put it into that company? My high school friends, we just got together like Form 5, I think. And there were small groups who like to look at stocks every day, right? So I just went random. Anyway, a few years later, I took that money out. I bought my first smartphone. So it's gone. But anyway, yeah. So I grew up in a I would say financially we had a lot to work on because my father is a religious man and there was his job as well. So we didn't really make a lot. But I started working in software since 15 years old, just doing building websites for people. I'm pretty old right now, not super young, but not super old either. I grew up in the .com era, right?
Oh.
So that's when I started building websites, and that's how I got into IT and software. And I think I started my investing journey quite early. The high school one that I just talked about wasn't a serious one, right? But as I started my first job in a post uni first job, one of the first thing I did was to talk to my a banker, and she managed to get me to start buying a unit trust. So that's my first step, right? And I actually sold it at a bad time, and because I think I had no knowledge to decide when to sell either. I only got to be more serious in refining my portfolio in the last 5 years.
I see.
So I probably spent about 15 years or more, right, with a terrible portfolio. And over time, as I moved to Singapore, I started to reduce my allocations in Malaysia and started to rebuild the whole portfolio. It took about 5 years to bring everything down to zero in Malaysia. Yeah.
Right. So before that, I just want to get a sense also of your path into tech. Right. You grew up in the .com era, and how was that like? Getting into tech and all that.
I thought about this question earlier as well. 10, 15, 20 years ago, when we talk about building software, there's no such thing as, there's such thing, all right? There was such thing, but probably not as common. There was a such thing as product management, right? It's just a bunch of software geeks get together, build a solution, and let's test and see whether it works, right? But these days, when it comes to building software, I think it's beyond just software dudes getting together, right? And that's how I see how .com level software creation compared with today, right? Like most businesses have to become a digital business, and that's also makes SaaS become very interesting, because at the end of the day, SaaS is not really a business model; it's a delivery model, right? And if you're a company that delivers value, there are some stuff that you need to outsource, right? And SaaS provides you that.
Right. So like, was it difficult, like having a career in tech? I don't assume too many, but I hear stories that tech guys work really hard. And was it difficult to build tech and invest at the same time? And if I'm not mistaken, also the last time we chat, you said that you also founded a company, right? Which eventually you sold it as well. So maybe you want to talk a little bit about that. The last 5 to 10 years, I am no longer active in writing code, right? I think the managerial responsibilities you have, right, over time will eat into how much time you could spend in writing code. So but anyway, I think during college time, the first 5 years, right, from college to my first job, I think I probably spent way too much time in front of the computer, to the extent that I actually developed the carpal tunnel syndrome, right? Yeah. So I actually had to change to use good keyboards and good mouse, right? So definitely, I think had a lot of times had to be invested, and the great thing about tech is there are just so many online resources available, right? So you actually spend most of the time in front of the computer, either reading or doing a podcast, right? Listening to podcasts. So the whole software development journey wouldn't be possible, or your learning wouldn't be so much easier if the community do not share, right? Of course.
And that's the greatest thing about tech. The entire internet is about sharing information. So I think as long as people know that self-learning is important, right? Because there are tech people who expect companies to pay them to go and get certification, right? That degree of learning has a limit, right? But deliberately putting time to go through I don't know, let's say a 1,000 pages of user manual, right? It's a programming reference book, right? It totally will level you up faster than going through for 3 days courses.
Yeah.
Right. So, do you have any more questions about his path? Because I'm going to the investing right now.
Sorry, I think you asked about my startup experience as well.
Right.
Yeah. So after my first job, I think I went back to my high school friends.
Right.
Because we actually started doing web hosting related solutions way back in high school. So I did web design, and then I have this friend called Wei. Right now he's the CEO of Speed Home. If you have heard about Speed Home.
Okay.
Yes. He was a sale person in a web hosting company. Yeah. So we got together after my first job. Together with another guy called Waikin, we started a company called Atlasian. It's a CDN company, content delivery network. So if you invest in infrastructure as a service company like Akamai, Cloudflare, Fastly, right? So we are in the same category. I think that was 1917, 1918, I can't remember. And sorry, 2007 or 2008. There was 2007, 2008. The term cloud computing probably was coined already, but it wasn't popular yet, right?
Okay.
Yeah. So we did that for like 3 years, and then we were acquired by Onet. I left the company after I've spent another 2 years later.
I see.
And then now I'm with my current company, Service Rocket, for about 8 years plus.
I see.
Right.
I see. I just have one question though. What MJ asked from the angle of your investing, I probably would just want to understand what was your mental model when you decided to actually take up tech and IT in your childhood. Was it an opportunity given to you by your parents, or was it something that you just kind of stumbled onto? And do you feel it actually helps you shape your investment philosophy somewhat, which we'll explore much later. But did it? What made you go into tech?
Yeah, so I mentioned just now my father is a religious person. So he's actually a pastor.
Okay.
And every week he would have to work on the church schedule, and he did that together with a friend from the church, and that person has a computer. Eventually, he managed to convince my parents to get a computer.
Okay.
so that's how I happened to have a computer when I was in Form 3, right? And I think I was doing pretty well in my high school from Form 1 to Form 3 until the computer arrived. Yeah, so then I ended up being, the Chinese parents will always say, stop playing computer, right? But in reality, I wasn't playing, I was reading stuff. Yeah. So I think that's how it started. Oh, and then I was a heavy gamer back then as well. I played a lot of Final Fantasy and Resident Evil. So I started reading walkthrough online, game FAQ. I mean, I can't remember.
Anything to gain an edge, right?
Yeah, so I read a lot, and I started to build websites. I tried to do a Chinese translated version of a Final Fantasy VII website. So that's how I picked up writing HTML and JavaScripts, and then eventually Perl, PHP, then a lot more languages. Yeah.
Great.
Then how I really got into the industry, because so I mentioned that I didn't do well after that in high school, but I got lucky because I was mentoring some people to join some web development competition, and they were too young, they couldn't use the scholarship, so they went to me. So I managed to get into Taylor's for free.
I see.
That's how I did not end up not having a degree.
Okay.
Yeah.
That's interesting. Okay, MJ, back to you.
Yeah, okay. So now I think one area of investing that has so much potential, and what we're mainly going to talk about today is cloud. But it's starting to become like a buzzword, right? Which is when you know that it has hit the mainstream and there's going to be a lot of misconception, right? Like blockchain and IoT, these are buzzwords that, you ask 10 people, they give you 10 different answers. So, being in the industry and having interacted with, a lot of software, SaaS, things like that, what is your best understanding of cloud? How will you explain it to us?
Yeah, I do think a lot of these keywords, and at the same time, by the way, I don't think I understand IoT or AI good enough. But I do think all these keywords, they do go through their own hype cycle, right?
Yeah.
And maybe cloud at the beginning is a hype, but at this point, right, cloud has become a reality that no one else can truly say they can be totally disconnected without it, right? If you run a business, it's kind of like let's just say in the past you did not have to use a telephone at all to run a business because your neighbors could just walk to your shop and buy stuff from you.
That's right.
Right, but when telephone is adopted by everyone, you can't say I don't need telephone, right? So similarly, the .com era, everyone would try to have a presence on the internet, right? But right now, it's not having a presence on the internet anymore, but it's to exchange data with your partners, right? With your providers, your customers, allowing them to perform transactions. Like, when's the last time you went to a bank? Well, actually, I did. I just went to the bank today to drop a check.
What? What's that?
I went to a bank to drop a check. Yeah, I was dropping a check. Yeah,
okay.
I was dropping a check. I mean, some companies still issue checks, right? So, yeah. So, but I think that's what's really changing in the world, right? I mean, probably people who were born in the last 15 years, as they grew up, they probably will not be seeing checks anymore. So I did think cloud has arrived at a stage that is means to conduct business to a user like us, right? It is a way to reduce complexity in managing stuff in our machine. What do I mean? In the past, we had floppy disks, we have a hard drive to back up stuff, right? Right now, if you pick up an iPhone, you pick up an Android phone, somehow they are all connected to either iCloud or Google Drive. So the concept of backing up stuff, maybe to us is something, but to the younger generation, I think they wouldn't be imagining that anymore. To a business, right, it's means to conduct business and transactions, right? It also removes what you can't afford to build, right? If you you can use an HR software as a service, right? Probably can totally replace you having an HR department. So I think it is very beautiful way, right, to generate efficiency for the economy and also to our personal life.
Right. So I know there's something that you really believe in, which is that cloud is more than just software as a service. So you want to explain what you mean by that?
Oh, yes. There is this thing called, probably a little bit too technical, so I won't dive there. It's called a cloud native landscape, right? It pretty much draws out what constructs the industry. And in fact, there are so many other landscapes available. Like if you click into the marketing landscape, you can see these are different software companies that offer marketing solutions, and marketing is not a very small vertical, right? It's a very broad thing.
Correct.
Yeah. So similarly, now back to computing, right? We have software, right? And then we have platform, and we have infrastructure, right? And of course, in between this tree, there are also other smaller layers, right? But in general, when we talk about cloud, we are talking about asterisk as a service, right? Whatever as a service, right? So we talk about software as a service, platform as a service, infrastructure as a service, or if you want to see it more simplified, you can just see it as software and infrastructure, right? So because things like companies like AWS, companies like Amazon, right? They offer an infrastructure as a service called the Amazon Web Services, AWS. But at the same time, what's being offered in AWS also includes some of the platform as a service solution. Like I think AWS Amplify, that allows people to build apps a lot faster.
Mm-hmm.
So yeah.
So I'm not sure if it's so technical. One thing that caught my ear was you saying that AWS, being an infrastructure as a service, enables people to build apps faster. So what does that actually mean? Like, how does that actually happen?
In the old days, if you have to, in the old days, yes. In the old days, when you have to build a website, we will have to contact a web hosting provider, right? And then you have to wait for them to reply email. And then probably you will have to tell them what you need, right? And then they will pre-allocate some resources that if your demand, if the demand of your website or the business increase, right, it will also take you some time to renegotiate and to adjust the capacity to run your business. Whether it's a website or business or web app, right, or mobile app, right? If we continue to use the past model, it will not be able to deal with demands elastically. So with AWS, things like AWS, what they truly change the industry is you no longer need the old school hardware, right, to operate your digital business, but rather based on configuration, right, that could adjust to the demand, right, and it will provide a supply in a very elastic way. So and everything can happen in real time, right? Yeah. Let me give an example. When AWS first came out, right, they have this concept called EC2. Sorry, not concept, but there's a service called EC2, right? And it provides computing resources to you. And behind a website, right, you would be processing transactions. And let's just say you are reaching certain threshold that you're running out of resources, right? You could scale dynamically to add more either EC2 servers, right, or to add more containers to make sure that your website can still serve, right? And this kind of like, I mean, in the past, when you go to Twitter, when there's just too many people flood into Twitter, you will see a fail whale graphic, right? Because they just run out of resources. But nowadays, right, it's very, very seldom you will see this kind of thing. Yeah, because everyone is trying to use infrastructure as a service to operate their business.
Yeah.
Right.
Maybe for the benefit of the audience, maybe I ask Yuen Chi to take us back through time, because I grew up in the .com era like you. 56K modem at that point was considered heaven.
Hey, I used 3.6.
Yeah, 3.6. Or but let's take a step back, and it says, let's just say in the year 2000, if someone were to start a digital business and to offer an e-commerce website, what are the things or services that business will need? And you contrast that with whatever you just said on Amazon or EC2 or someone on the GCP. Maybe for the benefit of the audience, because like, what you said earlier about thinking about backup, at that point, year 2000, you have backup after backup, you have the zip drives, you have all these kind of things. And today it's like, it's on the cloud. What backup you're talking about is redundant. So maybe to contrast that, can you take us back if in the year 2000, if you were to start an e-commerce business and you were to engage in service providers to provide you the same function that a cloud service provider can do to you, what would that look like actually?
Yeah, so I think I kind of mentioned that just now. You have to contact the web hosting provider, right?
Do you need physical servers on site?
You probably might not need that, because there's also this concept called a shell, right? And it's pretty much offering you a space in their physical server.
Okay.
Right. But if the demand of the website has increased too fast, right, then this provider will run into issue to fulfill right? And then your website will go down, right? And in order for them to fulfill, they have to go and buy more hardware, or they have hardware prepared, right, to fulfill. And even that, right, you first have to your website needs to go down first. Right? Your website needs to go down first, right, before you can say, hey, I need more server. But I don't think you can operate a business this way anymore today, right? There's no website going down and then call Amazon to fulfill. But of course, if you are not providing enough resources, even in the cloud environment, right, you can still run into a resource exhaustion situation for sure. Yeah, I'm not sure whether that explains and answers your question.
Yeah, I'm just trying to give context to those who are not from the IT background, or they don't see all this infrastructure that goes on behind the scenes.
Yeah, and you might take, when your website went down in the past, right, and you call your web hosting provider to provide you with more servers. Let's just say they have run out of servers.
Yeah.
Then you probably need to wait a day or 2 or 3 or more. I don't know.
Yeah. And today it's like, you just spin up a virtual server. You just pay and you spin up and you can go get going, right? So that I think the reason why I asked that question is so that the audience kind of have an appreciation what has evolved over the years, and also what to expect going forward.
So much, right? Like even watching videos these days, you can watch such high quality video being streamed, right? And you cast it to the TV, it looks just as high quality as turning on the TV.
Precisely.
Right. Back then, when we watch a video, we have to scale it to a really, really small size to look high quality.
Correct. And what you just said, I mean, if Netflix existed 20 years ago, I don't think if they were to use the same delivery model today, it would have worked for them as well, because of the infrastructure didn't exist, the bandwidth didn't exist, and they would have probably just stuck to mail in DVDs. So much businesses has been democratized because of this.
And that's why, right? And that's why we call cloud as a delivery model. It's not really a business model. You think about it, right?
Yeah.
The bringing you the Netflix content using the VHS, using the DVD, and then now today they're using the internet to do it.
Yeah.
Right. It's just a change in delivery model.
Correct.
So I really want to get into the breakdown of the industry, some of the big players. How do you divide it? What are the broad categories? But I want to make a small detour here first, because I think it's important. One thing I hear a lot from investors, especially foreign investors, is that they'll say that they'll say something like, I don't like the old brick and mortar business model. I like the SaaS business model. Now, that's actually something you kind of disagree with, in terms, not in terms of they prefer SaaS over brick and mortar, but the phrase SaaS is a business model, or the SaaS business model. And correct me if I'm wrong, you find issue with that.
Yeah, not intentionally, right? I also think the generalization is understandable, like why people would call it that way, right? But what they're truly looking at is how can we be smarter in using a subscription-based approach, and also are we able to use data to charge the customers more effectively and efficiently. Right? And I think this is what the internet has enabled, right? And then delivered through the internet, and therefore, right, you simplify that as the SaaS model. I understand that bit. Yeah,
it's a marketing term, essentially, right?
I think it makes people to understand the whole thing easier. But you can totally operate delivering DVDs using the SaaS model. Is that not true of the internet? Right? You subscribe, right? If I am able to read data from you when you watch the DVD and such, and collect intelligence from there, and then adjust pricing accordingly, right? In a more real-time fashion. This is really just how data exchange has become so high speed, and that enables you to make really fast and smart decisions, and therefore the SaaS model, I guess.
Right.
Yeah.
Okay. So now we break down. So, one thing that I think most of our listeners are familiar with is, the standard manufacturing model of or the supply chain, right? So you let's, for example, oil and gas, right? You dig the oil, you refine the oil, you sell the oil, right? Upstream, midstream, downstream. So every business model is similar, right? In that there are stages. Yeah. And for the cloud computing industry, what are those stages? What is that supply chain, and how would you divide them? Because I would assume that not every expert or not everyone in the field will have the same framework. But what's yours?
Yeah, I think I'm gonna talk about two things. So number one is I mentioned about the landscape just now, right? So the landscape pretty much explain the layers that you have, and we all know at the bottom that supports the industry is the infrastructure. Of course, you can go even deeper. You can talk about the chips. You can talk about the CPUs, the data centers, right? So we're gonna skip that whole piece, right? So we have the infrastructure layer, right? And then on the top of them, they provide ways to build software faster, right? Let's just call it the platform. And then within that platform also has a hell of other things, right? Like monitoring, because you need to be able to track your user, right? You need to be able to trace errors, right? And you need to be able to store data, and you need to be able to replicate data fast, right? You need to be able to do analytics on your data, right? So as you start looking into all this components that constructs the platform operations, right? And then you realize that there are actually a lot of things to do, and therefore, right, you can have a lot of players there, right, to fulfill the needs of the market. And then now we have that software layer, right, and then the users. So that's the layer that I'm seeing.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content, and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
So sorry, let me just summarize, okay, because this is new information for me. So I know it's a lot of new information for our listeners as well. So at the bottom of the pyramid, you get the infrastructure,
suppliers,
the platform, and then the software, and then finally the users, lah.
Yeah. Okay, I also think this is an oversimplification.
Oh, of course. Yes. Oversimplification is always the best,
Yeah.
Go on.
Yeah. Then the second part is, if you are an investor, how do you choose, right? And I think that's the difficult part.
Yes,
it's difficult because, I mean, just going by Peter Lynch advice, right? You want to buy what you're familiar with.
Yes.
And yes, you might be an Amazon user buying books from them. It doesn't mean you actually know what does it mean by AWS.
Yeah.
And I'm gonna touch on Snowflake a little bit. And that's because Snowflake has such amazing SaaS metrics, right? So it actually attracted a lot of friends to ask me, hey, should I buy Snowflake? Right. But the problem is not unless you have been a developer or have been in an IT procurement role, right? You probably won't understand what can Snowflake truly do,
right?
And also what are the threats that Snowflake face,
sure,
and also whether their thesis can live through the competition, right? So a company like Snowflake provides database and big data and analytics solutions.
So where do they sit in that 4 layers?
Yeah, it's definitely at the infrastructure.
So they're an infrastructure level. Okay.
Definitely at the infrastructure layer, and but of course, and some bits in the platform too. Their competition could come from other data, let's call them casually, let's just call them big data companies, right? So they have all these big data companies to compete with them. At the same time, you have all these cloud providers like Amazon, Microsoft, and Google, who are also very capable of building very similar solutions.
Snowflake, right? Okay.
Yeah. So now, if you're not in that industry and you decide to buy Snowflake, how do you observe how the competition is changing?
Okay.
Right? And in fact, even when you go into look at Amazon or Microsoft or Google's quarterly or annual report, they will not tell you how well is their database solution doing. Right. So now, how can you do due diligence properly? It's really, really hard. Right.
Right.
Yeah.
So before that, I know we want to get to the familiar names because we know them. But speaking of Snowflake, right? Obviously, I got interested in Snowflake. Not that much interested yet because one of Buffett's lieutenant bought it at IPO, right? So and Buffett never buys IPO, never buys tech, never buys company with basically the kind of valuations that there are, at least optically. But I want to get a sense of how important Snowflake is to the industry. And my question is, let's say if Snowflake or companies like Snowflake don't exist within the infrastructure, what is lost? How important are they?
Oh my God, this is a very dangerous question.
Dude, actually, what MJ is trying to say is, do they matter?
Yeah, because like I think that's how I would understand things, right?
Yeah.
If you're like, if Google is gone, something of value is lost, right? My calendar is gone. My whole life is gone. Because
our whole business is gone, MJ.
Yeah, what's happening, right? We store our videos on GCP, right? So
yeah.
So I mean, there's many ways to understand Snowflake, right? One is to read up on the entire industry, or my way, which is how important are they? What happens if Snowflake disappears tomorrow?
Specifically on Snowflake, right?
Yeah.
Okay. Disclaimer. I work for a Palo Alto-based company. We are we do business with a lot of software companies. Some of these names that I have mentioned, they could either be our customers or our partners, or even our suppliers.
May or may not be. Okay.
May or may not be.
Got it.
This, you probably have heard about this term big data, right? Since maybe 5 or 10 years ago, right? And of course, there has been evolution in big data as well. But maybe more than 5 years ago, people would talk about cloud era.
Yeah,
right?
cloud era. Yes.
Yeah.
Hadoop.
And the Hadoop solution.
Yeah.
Right. And the story that Snowflake has is very different, right? The story that Snowflake has is it can provide you a multi-cloud, right? Or a multi-cloud solution that's a lot more cost efficient and more feature rich than what Google, Microsoft, or Amazon could provide.
Okay. Slow down. What in the world is multi-cloud? I thought there was only one cloud. I thought that was the cloud. You upload everything to the cloud.
So the world of database is very broad, and I'm not a database expert, just so you know. But for either a business or a website, right? You either store data for records purpose.
Okay.
And you also store data for analytics purpose, right? And I think Snowflake can achieve both, but more towards the analytics side. And the cloud providers, right, like Microsoft, which has Azure, and Amazon has Amazon Web Service, and Google has Google Cloud Provider. The GCP. So they also have their own solution, and some of them can be expensive and some of them can be cheap, right? The strength of Snowflake is your business do not have to log into a specific cloud provider, right? I can deploy it to my solution can be deployed to any of these cloud providers. But of course, when Snowflake started, they were only AWS compatible.
Right.
Right. But over time, they have grew to Google, then they have added Azure as well. So now, if Snowflake disappear, right, back to your original question.
Yeah.
If Snowflake disappear, right, we still have other providers who could provide competing solution, right? So it's not the end of the world for sure.
Right.
But if Amazon disappeared tomorrow, I think maybe let us say 1/3 of the world will be disrupted for sure. Yeah.
Actually, can I sorry, MJ, can I agree simplify this in a way that they are some sort of a cloud aggregator? That means if I come through, I'm a customer, I don't want to deal with, or I'm scared to just store my data on Amazon, and I want to have some sort of redundant kind of model, then I go to someone like Snowflake. Snowflake will adjust, let's just say 1/3 of it is in Amazon, 1/3 of it is in Google, 1/3 of it is in Azure for security purposes or safety.
Oh, no, I don't
Is
think
that the
so.
right way?
Yeah. No. I don't think that's what Snowflake is for.
Okay.
But let's just say you want to build a data lake, right?
Okay.
Or data warehouse. Let's call it data warehouse. Let's call it data warehouse.
Yeah.
Let's say you want to build a data warehouse, and if you do it on Amazon, the typical solution that we'll go for is called Redshift.
Okay.
Right. And if you go by Redshift, the cost is a lot higher.
Okay.
Amazon charges you by the server and based on the specification that you requested.
Okay.
There are some fixed costs to deal with, and there are also some dynamic costs to deal with.
Okay.
When it comes to Snowflake, they allow you, if you say, hey, I have Amazon, I'm already an Amazon user, right? They can help you to deploy Snowflake, right, on top of Amazon environment. But at the same time, the way you'll be charged, right, will be slightly different. By the way, right, I'm not a Snowflake user, so I could be explaining something wrong. If so, please correct me later. Snowflake charges you by computing utilization, right? So it's a very different pricing model compared with Redshift. So to a lot of people, I think it is more approachable that way. But at the same time, right, because it offers, although similar, but definitely competing and also richer features compared with what Redshift offer. Therefore, I would say it's more attractive, right? It's more user friendly. You could get a lot more things done faster as well. So that's the way I explain it. And now, if you are someone who is familiar with Snowflake, and you do have a cloud, and you do have some of your infrastructure sits inside Amazon, but you also have infrastructure sits inside Azure right now, right? You can use Snowflake in that cloud as well, right? So I think that makes what's behind, right, what's underneath, whether it's Microsoft or Amazon, what's underneath become less relevant because the interface right now is Snowflake itself. So from the interface, you can say, I want this database to sit in that location, region, or whatever inside that cloud, right? Actually, by the way, that's not one cloud. When we look up the sky, there are
many clouds
moving around.
Right. So
yeah, I hope that explains a little bit. Yeah.
Yeah, I think I grasp it a little bit better now. So I want to go back into something you said earlier, which is really the competitive landscape, right, of Snowflake. And you said that, at least I get the hint that Snowflake's mode, at least from your point of view, is not as strong as some might think. And you said that, what if AWS decide to do what they do, or Azure decide to do what they do, or Google, right? Because Google, is very dominant.
Like Google has BigQuery as a solution, which is very affordable.
So then my question is this, right? Snowflake has been around since 2012, right? It's 9 years, coming up to 10. And they've grown only since then. And why do you think that is the case, right? Is it just luck, or is this sort of business too small for Google to care about, right? I don't know what, I can't remember Google.
No, I don't think I have an educated answer to that actually, because I did look into Snowflake as a user, but I did not look into Snowflake further.
I see.
As in, I have never built anything on top of Snowflake, right? I mean, I tried to, And in fact, I also didn't study Snowflake as an investor that much. Yeah.
Right. So,
but I can give one reason why I did not dive deep into Snowflake.
Yes,
right?
yes.
I would choose another category, right? If you look at the CDN industry, which my startup was a CDN, I mentioned just now, content delivery network. We have Akamai, we have Limelight, we have Cloudflare, and we have Fastly, right? And of course, a few more other players in the industry. And definitely maybe 10 big players, right? And another 100 or 1,000 small players. But the industry is pretty defined. And also, a few top players have public information available. But right now, when you look at Snowflake, I just don't have enough data to benchmark between or even do a very educated, competitive comparison, because Microsoft, Google, Amazon, they're not reporting their database big data growth, right? You probably can still benchmark Snowflake against Cloudera on sales performance,
right?
But what are the other names you can benchmark with, right? Databricks is still not a public company today, right? So, but if I want to compare Cloudflare with Akamai, right? Akamai owns about 40% of the market, right? So I usually, when I go into when I choose to buy something, I will usually look at an oligopoly situation, right? And I love monopoly. So I love monopoly, I love duopoly, I love oligopoly. It reduces my chance to lose.
Yeah, of course.
But not telcos though. I think going to telco industry,
it's still a duopoly, but it's like declining.
Yeah, you increase the chance to lose.
So let's take a small step outside of Snowflake and let's talk about the infrastructure in general. Am I right to say that for the industry that Snowflake is in, they're not that defined yet? Like your CD, what was the word you used? CDPs. CDN, right?
Well, I think it's defined, but yeah, but please go on.
Right. So what would your gauge be of, I guess, the market share, the oligopolistic status?
Yeah, it's very hard to gauge. It's too hard to gauge. Yeah, it's too hard to gauge, and there's no public information for me to digest.
Right.
So I will avoid, right? And I think being an intelligent investor, we cannot just read one single company's report, right? We need to read a few more, and I just can't do it if it's for the case of Snowflake. So some people will say that then you are missing out big YC. Yeah, too bad. But also I don't want to lose money.
Yep.
So before we leave the infrastructure space, this is the part where I guess consumers like myself and a lot of those listening, they will find it difficult to understand because it's very technical. But what are some of the key metrics in general for infrastructure players that you look at that are important and unique to the industry?
The key metrics, right?
Yeah.
As in the metrics that I will look at
to judge its investability and to judge it, whether it's a good company, it's a great operations, things like that.
Yeah. So I have to look at my notes. I think as a SaaS company, right, we have this set of common SaaS metrics. People look at LTV. I think that's called a long-term value. You look at CAC. We call that the
customer acquisition cost.
Customer acquisition cost, right? And I think most importantly, right, your profitability metrics like ARR, right, annual recurring revenue, right, your net retention revenue, right, how well you can generate and how well you can upsell and how well you can retain your contract. I think all these are strength, right, and they can be looked at. They can be studied when you look at this existing companies compared with its last year performance, right? Are those metrics improving, right? Is the cost of acquisition reducing? Or it can also be looked at if it's a cybersecurity space, right? It becomes so competitive, right? Maybe the CAC will go up because everyone is trying to burn money to buy users. So I think some of these SaaS metrics are interesting, but the thing is, not all companies will want to share this information to you.
Of course.
And I actually find myself, so I have about maybe 60% of my portfolio is in tech, right? And when it comes to actually looking at these companies, I only look at some of those metrics occasionally, right? Because I focus a lot more on the common traditional set of numbers that people look at, like your revenue growth and whatsoever. But also, of course, in the SaaS space, right, people also look at this thing called the rule of 40. The rule of 40, and as we all know, a lot of these companies that we just talked about just now, a lot of them are not necessarily profitable, right? So even when we look at traditional metrics, like if people start applying like PE ratio on a software company, right, and they will say this is too expensive to buy, right? So you would say that when Amazon was $500, and until today it went up beyond $3,000, right?
Yeah.
Well, maybe you will look at PEG, not PE. So the rule of 40 looks at two components, right? Revenue growth and the EBITDA margin. And there's also this weighted rule of 40. And I think it really depends on how people want to game it. So when you take the revenue growth plus the EBITDA margin, when you add them both together, right, a pretty good company will have 40%, right? And I think this is a very cheap and easy way for you to screen through a bunch of companies in the same industry, and then to do stock picks, right? So, but as for myself, beside of the two sets of numbers I mentioned just now, I actually use F-score a lot when I do my initial selection, right? Because I think I'm still quite traditional. And when you do F-scores, I think F-score is about 9 metrics. I think so.
Yeah, it's the full name is like, it's like a Petrosky's F-score.
Yeah,
right? Okay,
F-score,
wow.
yeah. So it requires you to look at profitability, require you to look at health, and require you to look at efficiency, right? So like for example, if I compare Atlasian, ServiceNow, Zendesk, Asana, right? And I think the F-score looks pretty decent for Atlasian and ServiceNow, right? Probably not so good for Asana. And in fact, you can't even do that study on Asana because they don't have enough past data for you to analyze.
Right.
So yeah, I do F-score, and I would when you do these 9 metrics by yourself, right? Not going to Guru Focus to get an F-score. When you do these 9 metrics by yourself, it forces you to actually go and look at the numbers.
Correct.
And then you will ask, how come ServiceNow total asset has increased so much in the last 1 year, right? Oh, that's because they pump in more for investment. That's because they have they managed to attain more cash, right? And yeah, and so and so, right? So those are really good information. The last set of numbers I look at, and that's actually my primary set of numbers on a day-to-day basis, is revenue, the revenue trend, the earnings trend, and also the OCF trends.
Right.
Yeah, and I always look at these 3 to determine the face of the company, right? Like I mentioned just now, not all of them have good earnings. A lot of them could be negative in earnings. But if that's the case, right, what I truly admire in a company is what is the strength of the operating engine, right? And therefore, it should be flushing out positive cash flow in operations. And I think observing that movement, right, kind of to tell you that I think this company got it right? From the marketing to the sales to operating, executing everything, you know that their OCF is improving, right? And then now you might look at is their CFO also smart enough to bring in more money through other means, right? Then you look at their FCF and so and so. So at the end of the day, when you look at it, I don't really rely a lot on the SaaS metrics. Still rely on the changes in what goes underneath in your different financial statements.
Understand.
Right.
You spoke about two names that really interest me. Because MJ and I, when we started our business, we relied a lot on Asana as a tool. And you spoke about Atlasian. I recently managed to read up about the founding story, and they make great tools like Jira and Trello, right? So what makes, okay, in a nutshell, and to the listeners out there who may not have heard of this name and this tool, maybe can you give us a brief overview of what Atlasian does, and why do you think it's a powerful suite of tools for the user?
Yeah, sure. I think Atlasian was started in around 2000 by two Australians.
That's right.
And just so you guys know too, I actually had, if you go to my LinkedIn, you will find out that I actually was contracted to work in Atlasian for a few years. So I did know the founders. I think Atlasian is a what we call the sorry, let me start again. Yeah. Right. If you remember at the earlier of this recording just now, this session just now, I mentioned that in the past, building software is really about software geeks get together and try to create some solutions, right?
Correct.
And right now it's more like a serious business.
Yeah.
Back then, right, when things are not working, right, we need what we call a bug tracker.
Yeah.
I mean, nowadays no one calls it bug tracker anymore.
Yeah.
Right. So Atlasian started as a bug tracker, right? At that point, the competitor was Mantis, Bugzilla. Some of you might have heard about these names. At some point, maybe after 5 years or so, we also have like Pivotal Tracker, Track, and different other bug trackers that come out. The Pivotal Tracker is not truly a bug tracker, but it's more like a agile sprint planning project management tool, right? So bug tracker in the old days has evolved into project management tooling, and over time today, right, Atlasian is no longer a project management company. They are also what we call the ITSM company, IT service management. If you look at the last 1 year in their advertising or in their materials, right, they are pushing on ITSM a lot. And ITSM is, this direction that they are pushing for, right, is actually in the same market that ServiceNow is playing really, really strong. So ServiceNow is another player, right? So Atlasian grew from a bug tracker to a project management tool, and then now it's an ITSM company, right? Asana is still a project management company. I don't think they are in the ITSM space.
Yep.
Another player that some of you might have heard about is called Zendesk.
Oh, Zendesk, yes.
Yeah,
I never used their product before.
Yeah, so Zendesk is a help desk, right? But they also didn't go into the ITSM space, but instead, right now they are going into the CRM space. And I think this is what makes software investment very interesting, because like even for the CDN companies I mentioned just now, each of them are doing the very different diversification. Like Cloudflare has always been a DDoS protection company, but these days they're also diving into the whole security web gateways industry, and that has a lot of established networking and some security, information security players in there as well. So yeah, the kind of diversification, they are very interesting, and they also make it very difficult, therefore, to compare companies, because right now they're doing different things. They're selling, so it's just interesting.
Yeah, so in a way, you see this evolution of these different companies. From your point of view, what makes a great software company? Is it because it is not just geeks coming around and trying to develop something they enjoy, but more of an evolution to say, hey, software is meant to be easy, software is meant to be quickly deployed, and software needs to be seamless to the user? Is that a trend that you see in successful software companies?
Yeah, I think, what's his name? The Salesforce CEO, right?
Mark Benioff.
Benioff, yeah. I think Benioff always talk about this, right? Salesforce is a very customer-centric company. And in fact, if you just go through every single CEO of tech or non-tech companies these days, right, they will have to say that, and that's true, because when we build products, we got to think about the customer first.
Yes.
We don't build products to think about shareholders. But maybe we would build products to think about stakeholders for sure, because stakeholders is us, right? So yeah, I do think that's one, but at the same time, right, when we assess a software company, and when I assess a software company, and I'm not sure whether you do that, I think this is an interesting trick that a lot of people actually do, is to go to Glassdoor.
Yeah.
A great company is not just a company that treats their customer well, but treat their employees well. Yeah, so I'll put it that way, and hopefully that answers answer the question. What's a good company, right? Be it software or not, right? You build the right thing for the customers, at the same time you also treat your employees well, right? And the last bit, right? Recently I gave an advice to some friends who were asking me about some CDN competition as well, and I said, if you are a developer or you have an IT guy who's going to procure the tool, maybe you will be looking at how great is that product. But if we are as an investor, we are not buying the product. The company is a product that we are buying. And therefore, we have to look at the whole thing as a full package, right? The whole company is a whole product itself, right? That consists of the people, the culture, the process they have. And therefore, right, the customers that we have, the employees that you have, and also the entire operations, right? And I think that's the sexy part.
Understand.
Right.
Yeah.
So your question?
No, just one more because it's related. Because these guys are diversifying, and maybe it's coming from a space where MJ and I operate as quite a fully digital online business. We see softwares that have overlapping functions. Now, you mentioned just now about CRM, people going to CRM. And then you've got digital email marketing softwares and all that. What I see, and MJ and I can, every time I'm the operations guy who try to operationalize all this. And whenever I try to get a software, you have the CRM guy trying to do email marketing, and then the email marketing guy trying to do CRM, and vice versa. Is that something healthy in your opinion? That's one. Or is that something that because they lack growth in their original focus of the business, that's why they have to do that?
I think it can be. I know. I think it can be many reasons, right? I'm gonna pick on one company.
Yeah, please.
It is called Limelight. So Limelight is one of the top 5 providers of CDN.
Okay.
So the number one, right? I mentioned just now. Akamai owns about 40% of the industry.
Yeah.
I think Limelight during my time, when I said during my time, in more than 10 years ago, it probably has about 20% of the pie.
Okay.
It was quite big. Right now, they only have 4% of the pie.
Okay.
Right. So it's shrunk a lot. And the CDN industry is no longer just offering CDN, right? Like I mentioned just now, Cloudflare is also offering security.
Yeah.
Most of the CDN players that I mentioned just now, they are also offering this thing called the edge computing.
Yes.
Right. So they try to bring computing of they try to move computing power closer to the user. Right?
Correct.
And there is also this evolution called the AI at edge, right? And so how can you move even AI closer to the user? But anyway, right? So for a company like Limelight, they also started to shake up themselves, right? So like this year, they hired the CEO from another company called AlertLogic just to reboot the whole company. If you go to the Glassdoor, you'll see everyone is very positive about this CEO. They feel that the company is being rejuvenated, and then they also started to buy companies, right? So the last acquisition they made is actually how should you call that? Yeah, an edge computing company, right? Which also provide monitoring of users, website performance and stuff. So that company is called Layer Zero. And I feel just to go back to your question, right? And I feel that if Limelight needs to stay relevant in the industry, they cannot be behind the R&D, right? So either you build it or you buy it, right? And they have to buy it. So I think diversification has multiple reasons, right? For the case of Limelight is for survival, right? I mean, that's my take, right? Maybe someone from Limelight listening to this will say, no. We are doing well. We are not trying to do this for survival, right? We are trying to win. But for companies like Microsoft, I would guess it's because they want to expand. In fact, when they make a move to go into a specific market, right, is to win, right? Yeah. And when they do it, actually, they could also expand the total addressable market.
Correct.
Right?
Yeah.
Maybe it's originally a 10 billion market, right? But when more players go into it, it could blow up as well. So I would say it could be for survival. It could also be for eating up more shares, right? It's too, yeah.
Great.
So,
great.
In terms of diversification and even acquisitions, depending on how they choose to diversify, whether certain companies like to do it internally, right? Like Amazon, they like to, recently they bought Whole Foods and all that, but they generally like to start their own projects. Whereas, companies like Google or Microsoft, they like to mix it up a little bit with acquisitions and things like that. But in terms of diversification, what are your thoughts on vertical and horizontal diversifications? Do you prefer one over the other in your experience, or do you prefer something like completely out there? Like not even horizontal. It's like something completely different. Which one makes more sense to you?
When it comes to buying a company, right?
Yeah, as an investor.
As an investor. I have two answers to that. Number one is, like I mentioned just now, I love monopoly. I love monopolies. Baby influenced by Peter Thiel, by the way. Yeah, if you guys have read the book.
0 to 1.
Yeah, 0 to 1. They talk about the monopolies. Because the way I see it is, monopolies can create stickiness by adding more offerings in their product lines, and when they diversify, right, they further increase their stickiness. Right, Google coming from a search engine become a browser provider, right? In the past, you remember Google as a search engine, right?
Yeah.
Right now, you think about Google, think about Chrome,
Yeah.
right? And if they add more stuff, like now they try to pull people into Google Photos,
yeah,
right? And then we have been relying on Google Drive for so much, right? So as they just add more offerings, right, it just make it harder and harder for you to get out from the platform. So so that's one, right? So I definitely love when a monopoly start doing diversification. So because it's not for survival, right? It's to eat up the market.
Yeah.
Then the second part, the second answer is, I'm also very careful when it comes to investing in a very competitive market. So I have procured some security tool due to my job, but I do not actually hold, except for Cloudflare, by the way, I do have position in Cloudflare. But I do not actually hold security stocks. Stocks of security software companies. Yeah, because I think that space is just too crazy. Yeah, and in fact, I have been a user, and I have to study Datadog, New Relic, Dynatrace a few times, right? And I still didn't go into it because I feel that it is a very competitive market. And then you can see that this three names that I mentioned just now, pretty much like the CDN providers, right? They're also doing a lot of diversification. So they have moved from doing logging and monitoring for computing resources to what we call the containers, clusters, tracing, distributed tracing, and right now they're diving into security as well. So they are also going head to head with some other existing security players, right? So when I see a space like that, I will be very, very careful, and often my move is to I'm not sure whether this is a popular advice, but that's my move. Sorry, it's not an advice. Yeah, so my move when I see a situation like this, I'll go into ETF because I don't want to make a wrong move in my stock pick. Yeah, yeah, right. but therefore I love a monopoly or duopoly situation because I love to do dual trading, right? What I mean by that is I would hold AMD and Intel, right? And then I would rebalance whenever I need, because I feel that they have a very strong grab of the industry.
Yeah. But speaking about ETF, are there ETFs that are so specific to just cybersecurity?
Oh, yes.
Okay.
Yeah. I think it's become more popular, right? What's the name of the company? So we have First Trust.
Okay.
And then we also have Global X. I think Global X is a Korean-based company acquired by the New Yorkers.
Okay.
So we have Global X, we have First Trust, and definitely we have,
I think that's another one.
Yeah. So, the two names I mentioned just now, they are fund companies, right? And then they have ETFs, and their ETF is very thematic, right? Like cybersecurity, right? And definitely you will see CrowdStrike in
their holdings.
Yeah, definitely in the holdings. Yeah. Like I think First Trust at one point CrowdStrike was
The
beyond
biggest.
7%.
Oh, okay.
In this what do you call that? ETF called CIBR, right? So yeah, we have a lot of thematic ETF in the market, right? You could even buy blockchain infrastructure company. There's this one called BLOK, Block, right? So those companies are either blockchain related, right? Or they invent blockchain solutions.
Right. So what areas do you see have monopolistic situation, and what areas within the infrastructure, the entire tech space, right? Which ones do you feel that either already has a monopolistic situation or building or going towards, and which areas where you think it's just pure dog eat dog capitalism right now?
Yeah. This is my interpretation, right? So my data could be wrong.
Okay.
But definitely, right, when we look at the cloud providers, we know who are the top 3 to top 4.
Yeah.
Right. You have the Google, Microsoft, and Amazon, right? And of course, then you have Alibaba and the rest.
Right.
And you know, IBM and Oracle, they want to join the game as well. But we know Microsoft. The 3 names I mentioned earlier, right? They continue to gain. Make gains in their revenue, right? They continue to acquire more customers. They're still growing at a rate of 40 to 50% for their cloud solutions, right? So that's one, right? Cloud providers. What else? I do think CDN has a monopolistic situation, because except for Akamai, I don't think any other players are having dual digits market share. Yeah, but Akamai is a shrinking market share, right? I think more than 10 years ago, Akamai might have 60% or 70% of the market. And right now it has been shrunk to 40%, right? Then you might want to ask how much more people can eat up. But at the same time, while it's being eaten up, the market is also expanding.
Yeah.
Right.
So
they're still getting growth, right? Just not as crazy growth as Cloudflare. Cloudflare offer DDoS solutions. I think they do have not a monopoly, but they do have a lot of market shares in a DDoS solution. But you don't have a DDoS solution index.
Yeah, exactly.
But at the same time, right? You also Cisco, Juniper.
Oh yeah.
Yeah, so Cisco, I think, probably supply about half of the switches in the world. Maybe.
I thought more than that.
Yeah, so they do have, right? But again, right, it really depends on the DNA of the company. Some of those names, although they have a monopoly advantage, right, we know that they're shrinking, or they're not growing as fast, right? Like, how would you compare Akamai with Microsoft? I think you'll put the money in Microsoft, maybe, right? This is not stock advice, by the way. Yeah.
No, coming back to the point you made about Cisco, you see the 4 layers that you mentioned. Here we're talking more about the software and the application layer. How much do you see, for the lack of a better word, traditional hardware networking companies going to this? Because we've seen a lot of trade wars due to technology. Huawei is a good example. I mean, during my days, there's this company called 3Com. I don't know if you remember them, Yuen Chi. 3Com. Yeah. Where are they today? They don't.
I can't remember the logo.
Yeah. I can even remember the logo. Bay Networks. Bay Networks are also gone. And during that time, there was a consolidation. So the question is, how do you think hardware companies will trend going forward? Will they, in a way, pivot a little bit more into software solutions, cybersecurity, and all that to complement their hardware, or what?
IBM is just another example, right? It was a hardware company, right?
Correct,
and right now they are in the software space, and so I think they are bigger in services.
Yes.
And Cisco is actually not truly traditional anymore either.
Correct.
Like, I mentioned about some monitoring company just now. By the way, I hope I'm not confusing people, because I mentioned a lot of too many companies sometimes.
Yeah.
So I mentioned just now that there are Datadog, Datadog, New Relic, Dynatrace, and there is also this player called App Dynamics, right? So these four used to, and I think they are still pretty much the top four when it comes to logging and monitoring, or these days people call it observability. App Dynamic actually was acquired by Cisco.
I see.
Yeah,
I see.
acquired by Cisco, and Cisco continue to sell solution. So Cisco is not totally hardware anymore, right? They also offer a cloud solution. Like I mentioned just now, Cloudflare is getting into the security space.
Okay.
So there's a space called SASE, S-A-S-E. I don't remember what it stands for,
Okay.
but S-A-S-E. So in the SASE space, you have players like Zscaler, we have players like Palo Alto Network. Cisco is also in the space.
I
right?
see.
VMware, Cisco, Cloudflare is getting into it, right? So different competitors coming from different direction, right?
I see.
Yeah. So if you ask me, will I invest into this space? I won't, because I don't know who will die.
Yeah. Okay. So SASE stands for Secure Access Service Edge. So it's actually more towards edge computing already. It's a Cisco umbrella service today. So, wow, it's definitely evolved a lot since the .com era, Yuen Chi. I've not kept up to date, to be honest.
I think this space is crazy. I do think so, right? And that's why when I can't decide, right, I try to avoid stock picks, and I would just go safe with ETF. And then I would just top up my. Then I focus on the others I feel more confident with.
Right. Yeah. So what are the areas you would buy in ETF? I guess.
Sorry?
That's my query. What are the areas that you avoid stock picking, but as an industry, it's growing?
Yeah, right now ETF I have is cybersecurity. And I also have actually surprisingly have UpQ.
Of course.
UpQ, yeah. So that's autonomous, right? Autonomous and robotic, right? And I think that space is also insane. So I mean, you could be buying a component in that ETF that is in the second place today, but maybe tomorrow or a year or two later, you get wiped out.
Right.
Yeah.
Right.
So I feel stock picking in that is very dangerous. But of course, high risk, high return, right? I mean, I'm not a Tesla investor. I'm quite sure some of you or
a lot of Tesla bulls, I can assure you.
Yeah. So there's one space I'm looking at. It's called ID. There's one ETF that I look at. It's called IDNA. I think it's by iShares. It's actually it's in the medical space, right? It's not a SaaS company, by the way, but the medical space also has a lot of R&D, right? And also very competitive. And due to COVID and so many other things, it's also exploding a little bit,
right?
So I think, can I get at this is that even you are a user and you are in this industry, there are certain areas where there's so many variations and permutations. You rather spread your risk through an ETF.
Yeah.
And then those that are high in terms of confidence level and margin, you would rather pick that stock. So maybe can you share what are those areas that you feel has a good oligopoly or monopoly or duopoly that you feel very confident in actually?
Yeah,
but stocks lah basically.
But before that, if I can just add one more ETF, right? I do have this ETF. It's called 3069, right? It's Hong Kong.
Very interesting.
So 3069 is actually the Chinese HS tech, right? And because I'm not exposed to Chinese tech as much. I'm only exposed to Chinese tech as a user, right? Like friends around me who actually use the Alibaba cloud is very, very limited. So therefore, right, my knowledge about how to choose a Tencent cloud or Alibaba cloud or Huawei cloud, probably I can't give any answer at all because just not enough people talk about it within my circle, right? So in that case, right, we are just Chinese tech users due to Lazada, RedMart or Shopee, right? And therefore, I think our knowledge can become very limited. And in that case, I will also go with ETF. But I think, but I think the last few weeks, whether you're going with ETF or not, I think it's crazy. Yeah. But what I'm confident with, back to your question, I do have Microsoft. Microsoft and Google, they are really a very big part of my portfolio.
I see.
And they are profitable, right? Some other companies, like you mentioned about Asana just now, you mentioned about Atlasian just now. They are not profitable yet, right? So usually in my portfolio composition, I do have a 5% or so allocation for hypes. And these are usually the non-profiting companies. So I actually make sure that a very big part of my portfolio, they are profiting companies.
How big is big? Just curious. How big is big to you? Because I know different investors, I've asked this question as well. Some people say 7% is big. Some people say, some people are like, 30% is normal.
Yeah, I haven't been, so I'm a long-term holder, right? And I don't really sell. I think that's one of my weaknesses. My Google holding is about 8% or 9%.
I see. Okay.
My Microsoft has grown too fast, right? My aim is to keep everything below 10. My Microsoft right now is at 16%.
Okay.
It's going too fast, right? And I know there's no reason for me to sell. It's more like, how can I be as liquid as possible to diversify into buying other stocks?
I see. Okay.
Yeah.
Oh, so that means you just to be technically correct, right? You don't run a closed-ended portfolio, meaning closed-ended meaning that it's the amount of money inside. You don't take it out and you don't add anything. It's a more fluid one, correct?
Sorry, can you repeat that part?
So based on what I'm hearing you say, it's not a closed-ended portfolio, meaning it's a portfolio that you have, but you add money in, or you are okay to take it out. It's not fixed. It's not closed out for.
Oh yeah,
capital.
for sure. Yeah,
okay.
yeah. And the other stocks I have that are big, right? They are actually not that software, right? I mean, I do have Intel, right? It's a tech stock, and then I do have some Atlasian, but they are not at the size like Google and Microsoft.
Understand.
And like I mentioned just now, I really like the triple-E's, right? So
where's Amazon in this? I have
I didn't hear
Amazon.
Yeah, I don't have any Amazon.
I have to ask now.
Yeah, why I do not know. I think maybe even at the very beginning, I think when I was more active looking at cloud providers, probably Amazon was about it was already more than $1,000. So and that time Microsoft was way below $100, right? So you would feel that maybe it's cheaper. Well, no, actually it's more accessible, right?
Yeah.
As in the amount I need to put in, the amount of a US dollar I need to convert.
I see. Okay.
Yeah, it's more approachable.
Yeah.
So I guess instead of asking specifically, the whole company, right? These three that we talk about, Microsoft, Google, and Amazon, you own two of the three. How do you compare their cloud services? Because that's probably their biggest area of growth right now. And they're massive companies that are growing like about 30-40% in that area. How do you compare these three giants when it comes to cloud?
As a user?
As a user, as an investor, as everything.
Yeah, maybe as a user. Yeah. Because I think even as an investor, we have very little details about what's happening with the
Sure.
Yeah, they are not really disclosing their cloud data that much, even in their reporting.
Yeah.
Like even Google, only until very recently they report the revenue, right? They are not telling you further information about operations. As a user, so I'm both a Amazon Web Services as well as a Google Cloud platform user, right? If you ask me as an end user, the experience that I like is actually Google's. I'm not really a Microsoft Azure user. I haven't really used Azure yet. So, but although I do have a preference for Google, right? I spend more time actually building stuff in AWS because that's what I'm more familiar with. And in fact, AWS, I think it's not fair to call it a first mover advantage, but they kind of have an earlier mover advantage to have a lot more adoption compared with Google's and Microsoft, right? I think Microsoft is a late mover in this space, but managed to gain market share, right? Yeah. Google was actually early, but I think I don't have the correct answer to why Google did not win early, but instead it was Amazon. Yeah.
Mm.
Yeah, but as a user, I think as a user, a few years ago, right, building things with a AWS support, as in software tools that we have supporting AWS integration or allowing you to deploy things easier to AWS was a lot more prominent or dominant than what you could do otherwise if you're on Google or Microsoft.
I see.
So I think AWS does have an advantage in that space.
Okay.
But of course, and it's very similar that I mentioned just now. When Snowflake first started, it was Amazon. That's what they supported, right?
Understand.
But eventually they have to go into other cloud as well. So I would say software tooling, most of them, right, at the beginning, usually they was first start with Amazon because I think the bigger market is there.
The dominance, their dominance.
Yeah, definitely dominance. It's the same with I think also simplified, right? Most of the app creators will start with the iPhone first before they move to the Android, because I think Android will, well, I don't want to start a phone war in this
debate about, yeah.
I'm an Android user, disclaimer.
Yeah. Same here. I've been contemplating, MG have been telling me get an iPhone, but then, so anyway, different preferences.
But that's one thing that got me stuck throughout this whole conversation, right? The reason why cloud computing could explode, right? We really have to thank to the phone.
Yeah, exactly.
Yeah, exactly. It's totally the demand, right, was pushed by them.
Yeah. I mean, can you imagine those days? This joke that I don't know if I told MJ this. There's this joke in my previous company where I worked, Shell. They say that you have arrived in Shell if you have a BlackBerry.
My God.
I kid you not.
Hey, they have a very beautiful logo.
Yeah. So you have arrived in Shell when you've gotten your BlackBerry. That means you're important enough to be 24/7 email accessible, And that was when I started early in my career. And how the iPhone has revolutionized that everyone now has a BlackBerry. There's no excuse for you not to have email services or cloud computing services. Yeah. Speaking of that, I want to touch back on what you said earlier about GCP and your experience, and it's very much related to the adoption of cloud services and e-commerce for businesses, because I used to code in Java. I've completely returned it and I've forgotten about it because I've not done coding.
And Sun Microsystem no longer exists.
Yeah, exactly. So here's my question. It's very related to the investing world and to see how big this TAM really is. Where do you think we are in the curve of adoption by businesses using cloud services? Maybe you can start off from your experience, deploying these services from your perspective, and then maybe if you have knowledge about the different regions, do you see which region is adopting it faster or which region is adopting it slower? In your point.
I think in a normal world we probably can see that pattern, but in a COVID world, I think the last 1 to 2 years, the digitalization is rampant, right? Everywhere, right? Like in fact, like in the case in Singapore, right, the government actually encourages businesses to make work from home possible, right? And therefore it forces every company to think about digitalization and adopting cloud solution. I do think that the COVID has made reading this a bit more difficult. Yeah, I'm not sure whether I have a good answer for you.
Do you think we are at the beginning of the curve and with COVID accelerating? Are we in the middle, or are we already hitting the maturity stage in a way? I mean, it's just a gut feel from your point now, because I still see a lot of business.
Definitely not. No. Yeah, definitely not. Yeah, I'm in software. I think I'm quite optimistic about this. I think that our world will go only exponential. Yeah, not flat.
Okay.
I mean, most of the Gartner resources, right, they predict 5 to 10 years, right? And I think the growth of cloud providers is still between a 15 to 25% range of growth.
I see.
I think digitalization is definitely beyond 20 to 30% growth every year for the next 5 to 10 years to go. Yeah. And because of that, right, what makes cybersecurity space so interesting is the more companies adopt, software as part of their business, the more risk they're exposed to.
Exactly.
Right. And it just generates opportunity for this risk-based businesses.
Yeah.
So I actually do think that cybersecurity is one space that shouldn't be avoided. I mean, you think about flying your drones and your drones being hacked, right? You think about driving your Tesla and you got hijacked, right? It just makes I mean, we will continue to evolve into a more connected world, right? Think about when you look at your wrist right now, right? Most of the people are using
a smartwatch.
a smartwatch, right? Yeah. And then data is being transmitted, not through thin air, but you probably can't even see. Data is being transmitted everywhere, right? And I have a very digitalized home. I can tell Google, hopefully I won't turn it on right now. To turn on, turn off, lights and everything, right? So I will only see more and more in this world. It's not less.
Understand. Yeah.
And so the demand for more computing power, right? And in fact, right, if you look at the last 1 year, right, we are in a chip shortage situation.
Yeah.
We are not in a chip oversupply situation. But of course, we are in a chip shortage situation for a very different reason, right? But it also shows that the demand is so strong.
Yeah.
Absolutely.
Yeah.
So I want to go back a little bit to cloud and talk a little bit about the unit economics. I think this is something we didn't really go deep into.
Correct.
So there's the sales side, the revenue side, and then there's the cost side. So let's start with sales, right? How do these three big companies that you mentioned charge their users? Are there any differences? Like, so for example, the only one I'm familiar with is GCP.
Because we pay the bills, right?
Yeah, because we pay the bills, so we know how much would that the unit economics for that. Obviously, we don't know the enterprise versions, right? If there's enterprise, how about the rest? AWS and Azure. What are they like actually?
Yeah, not sure whether it is the best answer, but I try to simplify it. I think what I truly appreciate, right? When people talk about Amazon is exploiting their workers and paying them the chip. Jeff Bezos shouldn't be the richest man, right? Shouldn't be flying to the moon. I mean, it's not in the moon, by the way. So sorry. But I think as a developer or a person who still build software, right? I really appreciate how the offering coming up from Amazon Web Services has changed the entire industry in building software faster and more efficient, right? And we were talking about all this purchasing hardware and stuff, right? And those were really costly in the past. And right now it's charging you by utilization.
Yeah.
Right. It's about how many minutes or hours of computing resources you have used. Right. And of course there are surprises. And now back to Amazon, right? Your real painful bills in Amazon comes from when you start to transfer data out. And that's creates a mode, by the way. That's the really perfect mode they have, right? So Amazon, most of the Amazon margin. So you can read this hit piece. You can read this hit piece a month ago written by the Cloudflare CEO. Yeah. He was criticizing how Amazon charges on our network when things transferred out. And because they have this thing called a bandwidth alliance. Microsoft, Google, Alibaba, they're all in the same alliance. So they do have like friendly charging when you're transferring between some of these networks. But Amazon is not part of it. Yeah, it's actually a moat. Yeah, and then that makes investors to be like, oh shit, I gotta stick with this. But who knows, right? If Amazon decides to join, then they will have a reduction in the revenue. So I do know Amazon has a huge pricing markup when it comes to network costs, right? But of course, I won't. I mean, maybe they're evil for that, right? Or maybe they're not, right? But I'm still very thankful, right? We are not living in a world that I have to pick up a phone call to ask someone to upgrade my hardware.
Yeah, or to change the RAM on my server that is gonna.
Yeah. Like, can you please upgrade my hard disk drive to
Yeah.
SSD? Yeah.
So how about Azure then?
Oh no, I do not have knowledge about Azure.
Okay, sure.
Yeah,
so
but if you talk about like Google BigQuery, right? I think it also charges you on long queries actually. Yeah, no. So I think most of these cloud providers, the good thing about these cloud providers, their charging is all about usage and utilization, not by seats, right? And a lot of the, we talk about the infrastructure, the platforms, and then the SaaS companies, right? A lot of the SaaS companies, they charge by seats.
Correct.
Atlasian.
Netflix one, right? That's
like Atlasian as well. When you use Jira, right, or you use Confluence, right, they charge per user. But I think companies also become smart because when you charge by users, sometimes it might not be friendly, or sometimes you will have missed revenue. Correct. Because what if your users outsmart the system and they utilize too much, right?
They don't have granularity.
Yeah. So I think these days companies also work on a mixed model, right? Example I can give, New Relic, it's one of the monitoring player I mentioned just now. New Relic had been in the past charging by the number of machines or hosts that use the monitoring service.
Okay.
Right. I think they actually create barriers because we are living in a world that small devices is considered one machine.
Yes.
Right? And right now, if I want to put sensors in for logging purpose, right, I have to pay New Relic hell lot. Right. So last year they actually did a whole repricing. I think it's around end of July. You can read about it in the quarterly report. Right. So the whole repricing so that they will only charge you by utilization right now, by the amount of storage you're consuming,
I see.
by the amount of I can't remember the notifications you push, for example, right? So I do think companies will continue to evolve based on how the technology is changing. Because last time, this is actually totally relevant with all the stories we talked about just now. In the past, when we talk about putting in a logging sensor, right, it's really about putting into a machine.
Yeah.
Right. But then the concept of machine has changed from machine to VMs.
Yes.
Right. And then the concept of and then VM is not granular enough. We also have this thing called containers. Right. And then we also move into this word called a clustered environment, right? Backed by this thing called Kubernetes or whatever. And you could spin up a lot of jobs, right? And some of these jobs are long lived, some of them short lived, right? And yeah, so the world has become a lot more distributed in the way we do compute. Right, and the business model, the pricing structure has to change.
Understand.
Yeah,
understand.
So I think that there will be a lot more focus on utilization rather than on seats or hosts.
That's good. That's a good point. Okay, so now about the cost, right? What does it take to satisfy the demand of data usage, right, for GCPs, the AWSs of this world? What's the big cost involved?
Yeah, you know what? I actually did not study deeply on what makes up the cost of a Google Cloud, right? But I try to answer this in a very general way. You do see companies keep repricing, right? I mean, they are repricing either due to customer acquisition costs have increased, right? Or in the past, there are multiple reasons behind it. If I look at software companies like Atlasian, right? When you look at their what do you call that? When you look at their OpEx, when you look at the typical OpEx that we look at, for example, G&A over revenue, sales and marketing over revenue, R&D over revenue, right? R&D over revenue is usually the biggest component, right? They will be between 40% to 50 or 60%. It really depends on what's the phase of the company and how competitive is the market.
Yep. A
company like Atlasian has a pretty low sales and marketing. They are a very unique company. I think if you go through their story, you realize that words of mouth is the best way to sell Atlasian products. And the partner network is strong. I think the partners sell their products without having them to have very dedicated sales workforce.
Mm.
So yeah, I think and I think G&A is always manageable, especially for software companies. They're even smarter in using other SaaS-based solutions to solve a G&A problem rather than hiring a big accounting department.
Correct.
Right. So it's always the what I call the S&M, right? Sales and marketing costs. That's really, really high, especially in a very competitive environment. And then also the R&D cost is really, really high, right? And let us say Spotify, right? I think Spotify use Google, or maybe they're using Amazon. I can't remember. Probably Google, right? Maybe the Google bill is the biggest thing for them. I mean, of course, and also the developers are not cheap at all, right? I mean, just for the benefits of everyone, right? A software developer in Silicon Valley, right? It's the paycheck is between 200 to $300,000 US a year.
Annually,
Yeah.
So
annually.
there's about 20,000 a month, more than that.
Yeah, it's not cheap, right? Yeah.
So how about data centers, for example, the upkeep of all these data centers to store all the important data? Like, how big is that, or is that not very significant in your estimate? Obviously, I know you've not done.
Yeah, no, yeah, I haven't done that calculation at all. Yeah, although, right, I think maybe 10-20% of my portfolio is actually in data center REITs. No, but I did not do the calculation at all. Yeah.
Understand.
Right.
Understand.
Yeah,
I do
really
have one
answer.
question though. Going back to the cost of the developers, right? I do not know whether you've done any like a ratio comparison to say if their software developer cost is, let's just say, more than 40% or 50% of SG&A, and the intangible value they create is good or not. I mean, how would you benchmark to know whether they're spending enough on R&D and software development?
You know, because when they spend high in R&D, right, it could mean two things, right? It could mean they are really supercharging for more features.
Okay.
Right. Or it could also mean that they are not efficient. Right. So I think and that's the hardest part, right? Because we are only processing all this proxy, and they're not necessarily accurate, right? And now going back to avoiding stock picking because we are not in the industry, and now to even if you're not in the company, how will you know whether they're actually efficient? Whatever numbers that we're reading is just our interpretation.
Understand.
Yeah, but I think the right way of interpreting them, right, is to look at the trend within that company itself. But at the same time, you could still benchmark between the same players in the industry just to make guesses.
Understand.
Right? And I still think at the end of the day, we are still making guesses.
Understand.
Sure.
That's a very good point, actually. Yeah, thanks.
I think that is one of the best education that I've got from the software industry and how to really break it down. Now, at least thanks to you, I know you said that it's not it's oversimplification, but at least now I know the supply chain. Right now, I know who sits at the bottom. Where's Snowflake? Where is Cloudflare? Where is Datadog? Where's all these people? And then where does Google sit? So I just forgot. You said that there were 4 areas, right? So you, from the bottom, infrastructure. I forgot the second one. The one in between infrastructure and software.
I think I mentioned this 3 infrastructure platform. But of course, we can go in finer, right? Then there's software service, right? I think these days, even at the platform level, people also look at this thing called a container as a service. But like I said, how you want to slice that, right? It's up to how people want to slice it. But,
I don't want to get too deep into this, but what in the world is the platform industry like? I mean, what do you mean when you say platform?
Yeah, and that's why I try not to draw, because I also find it very difficult to draw a difference. But I can give you an example. Salesforce acquired this company called Heroku, right?
Okay.
Yeah, Heroku is definitely a platform as a service provider. The ability to deploy at the same time being able to monitor and redeploy, right? I mean, performing all this logistics activities through their platform in a very user-friendly way, as compared with, I think there will be a little bit more work to do when it comes to Amazon, because it's at a slightly lower layer. But I'm not saying the user friendliness is the definition, but it's also a very lazy way to conclude that it is more like a platform because it's the suite that it provides, right?
Right.
So no, I don't have an official differentiation, but people please look it up, right? There's a difference between IaaS and a PaaS.
Right.
Yeah, I think it's more accurate to say Snowflake is a PaaS, but maybe someone would say I'm wrong. Yeah.
Right. Yeah, because there are so many like interlocking functions with this entire space.
Yeah, in fact, you're right. You also have like network as a service, right? I also think whatever AAS you are, whatever S you are, right? I also think you can make up more S's if you want to.
Understand. I just have one question that I feel is related to this slicing and dicing is the big picture about programming on these platforms or programming on these services, because today there's this school of thought that you don't actually need to go down and code. There's this school of thought that actually says
no code and low code.
Yeah. Can you repeat that again?
Yeah. So I think there are no code solutions. There are also low code solutions.
Okay. So what are your thoughts on that? Because I'm very tempted to try out app sheets because we are using Google, and when I hear from my developer friends, they talk about this thing, Python, React Native, and all that requires a lot of coding. And then you have this low code, no code kind of solution. So what are your thoughts on it? And does it help? And then I'm coming from an investor hat. Does it help with the deployment of mobile applications? Because today, there's this word that says if you don't have a platform, you don't have an app, you're not in business. You don't have a solution to talk to your clients, to reach out to your clients better. What are your thoughts on this low code, no code versus those heavy coding to help with the deployment of all these services actually?
Yeah. So just to be very, very honest, I have not built anything on top of this solutions. But I was in a discussion with a few people on this topic just a few days ago, right?
Okay.
We were talking about AppSmith. Talking about Retool, right? And I think especially Retool in their documentation section, they have a lot of use cases examples.
I see.
Right? How you can plug this, how you can build internal tooling that connect to multiple data sources, right? Without being a wizard, right? Like you don't have to be a programmer, right? There's a lot more clicking. So I haven't tried those things firsthand, but I look at the use cases and it makes sense to me, right? It makes sense that not everyone need to go through programming to create something that works to reduce the routines that you need to do.
Yeah.
Right. So I see more justification when it comes to improving internal tooling. Right. But now, can you take this internal tooling and put it into the market? Is it more suitable to be a prototype solution, right? Just for people to test things around, to test the idea, versus you can actually sell a solution on top. And,
understand.
And then you can grow a pretty decent business of it. I would say some people, maybe they will be able to build very decent business, but definitely can't create a Netflix out of it.
I understand. No, I think I like the answer that you gave about using it as a tooling solution.
Yeah.
To help, let's just say this guy sells clothes on Shopee.
Right. But then you want to retrieve information faster, you want to get insights faster. You can put things out faster.
Managing of inventory, managing of customers and all that. And in the past, they probably put it onto an Excel spreadsheet.
Correct.
Yeah. And then
now you can tell your clerk that, because now your clerk, originally your clerk would need to learn how to do Excel. But
correct.
Now you can tell him to just go and click around.
Yeah, click around and build an API probably. Yeah. Okay. That was where I was coming from. Yeah. Thanks for that. MJ?
So I think, I love to know more about the software industry, and perhaps we can do that in a part 2. But I want to go into something a little bit more general now, which is your investment philosophy, let's call it.
Yeah.
And you gave us some notes before this and we read up, and the two very interesting words that I've actually never heard before, which is what you call the first and second law of supply chain dynamics. That's a mouthful. But the two laws are probably even more mouthful for me, which is bullwhip principle and clock speed.
Oh,
yeah.
Wow.
I read that. I was like,
oh yeah.
He highlight that some more, MJ.
I had to ask you about this because I've never heard it before, and I'm always excited about things that I've never heard before in terms that I've never heard before in business and investing. So yeah, please. What is it?
I think Blue Whip. Maybe I won't talk too much about Blue Whip, but I can give an example, right? So the Blue Whip effect in a supply chain is about the fluctuation, right? The disruption that you can cause, right, is actually a lot stronger and higher to the upstream. And the chip shortage is one of the example. Because the downstream players, they would try to overorder, they will react to the situation, and it amplifies further. And right now, it creates this whole chip shortage situation that we have. There's this thing called the beer game. I think if whoever is interested, you can understand the concept of bullwhip effect better by looking at the beer game. You go to YouTube, search for beer game and bullwhip. You'll find something there. But the clock speed is a lot easier to explain, I would say. Clock speed is a lot easier to explain. What are the what are the sectors in the tech that I would avoid, right? You can see that when I mentioned some of the companies just now, I try to stay with the infrastructure as a service or type of a service company. And I try to avoid even those that I'm familiar with, right? I put rather small allocation on them.
Okay.
Because the whole clock speed idea is there are two things. Number one is the closer to the downstream, the cycles, the speed is faster. Right. So a company die faster down there versus up there. Right. I mean, if you think about it, even in your telcos haven't died yet. But a lot of businesses either acquired or under TM or Singtel, right? They have been shut down already because it's so competitive. Right? Like Singtel used to have a video streaming service.
Oh, I didn't know that.
Oh yeah. They decided to shut it down. I think either this year April or last year April. I can't remember when exactly, right? But that is closer to the users. Things that are closer to the users that have a faster cycle to finish. But at the same time, the industry itself will always go through this integrating and disintegrating cycle, right? Today we are seeing a very moated situation, right? Like Apple can keep a lot of their users contained within iPhone and be happy about it, right? But maybe 5 to 10 years from now, there will be a disintegration. Right. I mean, at some point, way back, right? Whether I can give a good example. I think Sony was an example. I think they tried to, they were really dominating back in the 90s.
Yeah.
Right. But eventually the industry become a lot more disintegrated again, right? And as in, when I say dominating, it means they can create solutions that can lock you in, right? And if you use sorry, I don't have a very refined example, but what I'm trying to say is the industry will constantly go through a cycle that at one point, like right now, the big techs are the big guys, and they are really creating a lot of stickiness. But at the same time, the industry will also go through the disintegrating stage that maybe the big tech will get broken up because the competitors manage to come in. The new disruptors, right, will manage to steal market share from them and become bigger, right? Maybe Nokia is probably not, yeah. But that's the whole clock speed concept that I looked at. I think it was coined by this guy called, it's a professor from MIT, I think it's called Charles something. But yeah, that's the whole clock speed thing.
So if I can summarize it, you're saying that in terms of investing, you're looking for companies with low clock speed.
Yeah, I have a preference for that. Yeah.
The rate of change is a lot lower than closer to
Yeah, I
downstream.
feel safer. Yeah, but at the same time, that's not a rule, right? I mean,
Of course.
you can go to a telco and then you
Yeah,
make a lot
of
of
course.
losses. Right?
But am I fair to say that, as a general point, of course, if you just compare company and companies, the story is very different because it's very contextual in that case. But you say as a principle, companies that have low clock speed, in your estimation, higher to the upstream, have more survivability. So, for example,
yeah, and lesser players too, because the barrier is higher too.
So, for example, a Cloudflare will likely survive, has a higher chance of survival than, let's say, a Netflix or an Apple.
I think all of them are too big. Yeah, but oh, they are too big. Oh, they are too big. Yeah. I think there's a higher chance that you know what. I really can't say that because I did not work across different layers of the industry.
Mm-hmm.
Yeah, because I'm just a software builder, right? I'm not a hardware or a networking guy. Yeah, but I do think from my opinion as a investor, I do think the CDN players that we see today, right? Sorry, there's an alarm. Yeah, the CDN players that we see today from Cloudflare to Fastly to Akamai, I think they will still be around. But if you ask me, the other players in, let's say, marketing software as a service, right? I mean, we know HubSpot, we know what are the others? Can't think of those names right now, but yeah, that form of solutions, right? Let's go back to project management tooling, right? Yeah. Is there Trello? Is there Atlasian, right? And will there be more that will come in to disrupt compared with them joining a game to be a Cloudflare, right? I feel that that end, right, has a lot more disruptions.
I see.
Yeah.
Okay.
It's more imaginable to know how to build those as well.
Yeah. I mean, based on the info that we have now, where we sit in the point
right, like the number of e-commerce store you see.
Yeah, of course.
Versus the number of payment providers that you have.
Oh, yeah.
Yeah.
But it also comes with, I mean, like, for example, since you brought this up, you wouldn't see someone replicating an Atlasian as compared to someone replicating a HubSpot. I think that's what you're trying to say, right?
Yeah.
You know, the Atlasian, the payment service security provider, ADYEN, the Dutch company.
Oh, I don't know them, but go on.
Okay, so no, I'm just trying to draw a conclusion from what you said. Lower barriers to entry when you are closer to the client, and then higher barriers to entry, but more difficult to build closer to the source of value creation for the
and it's also a simplification tool. But yes, that's what I meant.
Yeah. Okay.
Yeah, the clock speed is higher when it's closer to the user. And
yeah. Because I mean, to build a CRM system, it doesn't need as much technical capability as building a payment network like Stripe, for example. Right? Yeah. Because I mean, Stripe is like the amount of things that you need to integrate and to code versus to build something
the bank you need to work with. Right?
Yes. I think that's maybe an example that could simplify that to the audience.
Right. Okay, I actually have one more last question only, and it's not inside the notes, so it's going to be a complete, a different kind of question
from Southfield.
Yeah. Before that, John, do you have any last question?
No, you go ahead first.
Since you're in tech, right, I have to ask you, crypto.
Oh,
right. What are your general thoughts? Are you invested? If yes,
no.
why? If no, okay. So
yeah, very very quick answer. No.
So see, that's interesting, right? Because you're in the tech space, and for me, by definition, if someone has tech in their bio or they've ran a tech company before, or done any of that, they're in crypto, but you're not. So why is that the case?
I hope I can give a more educated answer. But I was sorry, I'm actually checking some notes right now to give a slightly more informed answer to you, right?
Be careful how you answer.
Yeah, but what I want to say is I see, so as you have learned just now, right? I have a better appetite when it comes to infrastructure. I think that's just maybe the way I look at things, right? And similarly, I do think whatever we are creating today, right, the solutions that's closer to the user, some of them will go away, but the technology being laid underneath, right, like this entire the whole DeFi infrastructure, right? I saw some terms these days like Oracle, right? Like this friend sent me this cross-chain interoperability protocol, CCIP, and I was looking at that YouTube video, which I have very, very limited knowledge about, right? When I look at the infrastructure, I would feel confident that this thing is going to stay to power the banking industry and the financial industry one day, right? But names like whatever coins that we know today, right? Will they still be around 10 to 20 years? Probably not, right? So that's the way I see it. And I don't have an appetite for a fast-changing world. I mean, my fast-changing is fast-changing at fast-changing. Sure, I like it, but I want the infrastructure part.
Right.
So even if I need to get into blockchain, I would put my money into a block ETF rather, right? But I don't have either too. So
right, good point. Yeah, I forgot your point about ETF. So yeah, technically in a way, you have
I'm very conservative.
you have one toe into crypto in some sense, right?
Oh, I actually have. Just to answer you truthfully and very, very honestly, I bought some BTC when the world had very limited exchange providers, right? I think I held maybe 0.27 way back of Bitcoin. I think that was 2013.
Oh,
yeah,
man.
and I sold them. About.
Luckily, you didn't buy pizza or something using that, but it's fine. Luckily, you sold it.
Yeah.
But we don't know that, John.
Yeah. True.
Yeah. So ever since, right? No, I actually did not put my time into the crypto asset world. Yeah.
Understand.
Hopefully that doesn't disappoint you.
No,
it doesn't.
So any last questions from you, John?
Yeah, I just one, and maybe it gives context. Actually, Yuen Chi, MJ, and I, we've never met physically.
Yeah,
for the audience. And ironically, we got to know each other during COVID, and ironically, it was through Facebook that I reached out to Yuen Chi and we started chatting. So this last question is actually with regards to the investing community and the knowledge of the community. So just want to hear your thoughts on when people get online today to get investment advice, to get especially the millennial world, right? Today everything is a Google world. Today everything is a YouTube
TikTok
world.
world.
Right? Yeah. So you grew up in the .com area. You grew up, the diverging 1,000 pages programming manuals to get there. Do you see it as somewhat of a detriment today that even though answers are at their fingertips, but then it's very surface knowledge? And do you think that that is actually detrimental to their investing knowledge? Or do you think it is a democratizer that people are willing to put in the work and that people can invest better because of the resources at their disposal? What are your thoughts on that?
When I look at so it's a very deep question. when I look at myself, sometimes I would ask, right, my ability to consume information deeply these days compared with when I was 16 years old, has reduced, right? Is it because due to aging? I'm not sure. But I also feel that our ability to retain focus, right, has reduced so much.
I see.
Back then, when you look at a phone, I mean, not a phone, but the computer screen, right? There's no notification popping out here and there. There's no push notification. You can be very, very focused to consume a very boring manual that is not fancy at all. That is totally PDF printable, right? Just like a book.
Yeah.
And now we have all this, seriously, people can have a 30 seconds TikTok video and they try to package everything as compact as possible to give a stock advice. Yeah, I think both sides have merits, right? But I also think we as humans, the consumption patterns has changed a lot.
Understand.
And I don't think I actually like it that way.
Mm.
Yeah, I really admire back then when I spent my final year in System A because I study at the University of Nottingham.
Okay.
For my bachelor. I mean, moving from Taylor's to that one. Yeah. So I would be traveling with a train daily through KTM, and I would be carrying 1 to 2 programming books, right? And they are really, really thick. And I would just read through them, right? I didn't have other distractions. But these days, if you ask me to be in a MRT or whatever, right? And in between, I've switched so many apps. From Facebook to Instagram to TikTok to right. So I think that form of consumption pattern I actually don't enjoy seeing, but I'm also one of the victims.
Actually, I really like your answer because I'm struggling with that too, and I think
it's therefore detrimental.
That what you said, I think as it comes with age, right? Rather than passing too quick of a judgment, I think we try to take a step back and try to understand the context and the dilemma. Because what my fear and why the question to you is this, because what worries me is I see people take half-baked information and taking it as truths, and people become more biased, even though that data or that opinion online is actually, there's a lot of layers of nuances and context to it. And that's why, I thought about this because I just thought about how we met, online, because we shared a certain principle and a certain belief, and that's why we ended up talking.
And
yeah.
And it also makes me wonder, right? I mean, how many investors today? I mean, maybe it's still the same in terms of ratio, right? Maybe way back and today it's still the same. How many investors really go through the annual report, retrieve it, understand it?
Absolutely.
Right? Yeah. And how many people have read the Intelligent Investors and will want to spend time to go and read it, right? Maybe people would prefer watching a 30 seconds TikTok.
That's exactly my point. Yeah. But I really, really enjoyed this conversation. I bet we're only scratching the surface of understanding the
which means YC there is a part 2 and a part 3. Right?
Yeah, and I feel I'm actually not qualified to answer, but hopefully whatever answers I've given today, they are good enough for some people to do their research, right?
Well,
and thanks for inviting me.
Because you'll be on for part 2 and there'll be thousands of people listening to you. Yeah. That is exactly why you will be qualified when the time comes, right?
Yeah. So please don't make stock purchase or selling decision because of whatever I said today.
Yeah. Yes, of course. Before we end, where can people find you, right? If you want to be found.
If you want to be found, that's it.
Oh.
LinkedIn, Facebook, where, or an email.
You can find me on LinkedIn. You can definitely find me on LinkedIn. I turn on Twitter sometimes, not too active, but my Twitter content is mostly software development related. I think what I realized? I haven't really been adding friends on Facebook anymore, right? I think everything and Facebook just stopped there since we all moved to Instagram and the rest. Yeah. But I think if you want to ask me questions about investment, I think Facebook probably is the right place, because these days I use Facebook mostly is to read news and also to participate in those forums that we are both, all of us are in. So,
that's right.
So yeah, I think Facebook has become the internet forum.
Yeah.
Right.
Yes.
Yeah. I mean, if you remember, we had PHB, BB, and Investable. I can't remember all those names, right? And Facebook has become that right today.
Correct.
Yeah. So this is the end of the podcast. I hope everyone listening got an industry primer, right, into the software, infrastructure, platform, all of that good stuff. And if you like content like that, remember to, of course, share it with your friends. If you like, come watch some of our other videos. Look forward to seeing you in the next podcast. Thank you for coming on the podcast, YC. It's been a pleasure.
Thanks for inviting. Have a good one.